Trading is the act of buying and selling assets. Essentially, it's the heartbeat of the financial world. Every second, millions of trades are made across the globe, connecting people, companies, and even entire countries. But what does it really mean to trade? At its core, trading is about exchanging one thing for another, hoping to benefit from the difference in value. These assets can be stocks, currencies, commodities like gold or oil, or even digital assets like cryptocurrencies. Each market has its own unique rhythm, risks, and rewards, but the goal is always the same: to profit from price changes. To profit from price changes, traders must constantly watch the markets, looking for moments when prices move in their favor. Sometimes these moves are small and quick, other times they're dramatic and sudden. Prices move constantly, driven by breaking news, company performance, government policies, and global events. A single headline can send prices soaring or crashing in seconds, making the market a living, breathing entity that never truly sleeps. Traders try to predict these movements using a mix of information, technical charts, and deep analysis. They study patterns, track trends, and use data to make split-second decisions, always searching for an edge over the competition. Unlike long-term investing, which is about patience and waiting for value to grow over years, trading is active and focused on short-term gains. It's about making quick moves, adapting to new information, and seizing opportunities as they appear. It's a fast-paced, global marketplace where millions compete for profit every day. The action never stops, with markets opening and closing around the world, creating a 24/7 cycle of opportunity and risk. Your job as a trader is to spot opportunities in the chaos and act quickly, sometimes within seconds. It's about staying alert, thinking on your feet, and not hesitating when the right moment comes. Trading isn't about finding the best company or the most promising story. It's about identifying the best price movement right now, regardless of the underlying business. Timing and execution matter more than loyalty or long-term vision. You're up against everyone, from massive banks with teams of analysts and cutting-edge technology, to solo traders working from their kitchen tables. The playing field is vast, and the competition is fierce. Success requires more than luck. It takes skill, quick thinking, and a solid understanding of the rules that govern each market. You need discipline, a plan, and the ability to learn from both wins and losses. It's a high-stakes game of strategy, not a passive investment. Every decision counts, and every mistake can be costly. The pressure is real, and the rewards can be life-changing. To win, you need to know the market inside and out. That means constant learning, adapting to new trends, and never letting your guard down. So, are you ready to step into the arena and test your skills against the world? The world of trading awaits, fast, unpredictable, and full of opportunity for those bold enough to take the challenge. Trading promises financial freedom and the chance to be your own boss. The lure of high returns and stories of overnight success draw people in. For many, it's about the challenge, solving a complex, ever-changing puzzle. Technology has made trading accessible to anyone with a smartphone and a few $100s. Apps like Robinhood and Webull let you trade with zero commission fees. The dream feels closer than ever, but remember, the risks are real. Trading is open to all, but only the prepared thrive. Before you risk a single dollar in the markets, take the time to truly understand the basics. Learn what stocks, bonds, and ETFs are, and get familiar with essential market terms like liquidity, volatility, and diversification. This knowledge is your first line of defense against costly mistakes. The financial world can seem overwhelming at first, but breaking it down into manageable pieces makes it much more approachable. There are countless free online resources available: websites, video tutorials, podcasts, and forums, so take advantage of them to build a strong foundation. Don't hesitate to revisit the basics as often as you need. Repetition is key to mastery. Dive into both fundamental analysis, which focuses on a company's financial health, earnings reports, and industry trends, and technical analysis, which examines price charts, patterns, and market behavior. Understanding both approaches will give you a well-rounded perspective and help you make more informed decisions. Most short-term traders rely heavily on technical analysis, so get comfortable reading charts, identifying trends, and recognizing common patterns. The more you practice, the more intuitive it will become. Open a paper trading account or use a trading simulator to test your strategies in real time, but without risking any real money. This is a safe environment to experiment, make mistakes, and learn from them. Treat your demo account as seriously as you would a real one. Develop good habits such as keeping a trading journal, setting stop losses, and reviewing your trades regularly. These habits will serve you well when you transition to live trading. Don't overlook the importance of trading psychology. Emotions like fear and greed can cloud your judgment and lead to impulsive decisions. Read about emotional discipline, mental resilience, and how to manage stress. These skills are just as vital as technical know-how. Remember, the market is always changing. New technologies, regulations, and global events can shift the landscape overnight. Commit to being a lifelong learner, always seeking out new information and adapting your strategies as needed. Don't skip this step. Education is your best defense against costly errors and emotional pitfalls. The more you know, the more confident and prepared you'll be. Mistakes made on paper are valuable lessons, not financial losses. Use your practice time to identify weaknesses and refine your approach. Build your knowledge base before you start building your portfolio. A strong educational foundation will help you weather the ups and downs of the market. Never assume you know it all. The most successful traders are those who remain humble and open to new ideas. Stay curious, keep learning, and remember, your education is the most valuable investment you'll ever make. A trading plan is your rulebook. Don't trade without one. Define what you'll trade and your exact entry criteria. Set clear exit rules for both profits and losses. Use stop-loss orders to protect yourself from big losses. Decide how much of your account you'll risk on each trade, never more than 1 to 2%. Write down your rules and commit to following them no matter what. Review your plan before each trading day and after each trade. Adjust your plan as you learn, but never break your rules in the heat of the moment. Discipline turns chaos into structure. Your plan is your safety net. Treat trading like a business, not a gamble. Consistency starts with a solid plan. Risk management is the key to survival in trading. It's not just a buzzword or a box to check, it's the foundation that separates successful traders from those who burn out quickly. Every decision you make in the market should be filtered through the lens of risk. Before you even think about potential profits, ask yourself, how much could I lose, and can I live with that loss? Protect your capital above all else. Profits come second. Your trading account is your lifeblood. If you lose it, you're out of the game. That's why the best traders are obsessed with defense, not just offense. They know that capital preservation is what allows them to keep taking opportunities, even after setbacks. Always use stop-loss orders to limit potential losses. A stop-loss isn't just a tool, it's your safety net. It's there to protect you from the unexpected, from sudden market moves that can wipe out days or weeks of progress in seconds. Never trade without one, no matter how confident you feel. Never risk more than 1% of your account on a single trade. This rule might seem conservative, but it's what keeps you in the game for the long haul. Even a string of losses won't devastate your account if you stick to this principle. It's about surviving to trade another day. Position sizing keeps you in the game after inevitable losses. By carefully calculating how much to risk on each trade, you avoid the emotional roller coaster that comes with oversized bets. Consistency in position sizing is what builds confidence and discipline over time. Calculate your risk-to-reward ratio before every trade. Aim for at least 2, 1 or 3, 1. This means you're always seeking trades where the potential reward outweighs the risk. Over time, this simple habit can make the difference between a winning and losing trading career. A few big wins can cover many small losses if you manage risk well. Trading isn't about being right all the time, it's about making sure your winners are bigger than your losers. With proper risk management, even a modest win rate can lead to long-term profitability. Don't chase losses or go all in on a single idea. Emotional decisions are the enemy of good risk management. When you're tempted to double down after a loss, remember, one bad trade shouldn't have the power to end your trading journey. Professional traders think in terms of risk, not just reward. They know that controlling losses is more important than chasing gains. Their focus is on process, discipline, and protecting their edge over time. Surviving bad trades is what keeps you trading long enough to find good ones. Every trader faces setbacks, but those who manage risk can recover and keep moving forward. It's not about avoiding losses, it's about making sure losses are manageable. Make risk management your top priority. Study it, practice it, and make it a non-negotiable part of your trading plan. The market rewards those who respect risk. Without it, even the best strategy will fail. No amount of technical skill or market knowledge can save you if you ignore risk. Protecting your capital is the only way to ensure you have a future in trading. Stay in the game. protect your capital. Remember, trading is a marathon, not a sprint. The traders who last are the ones who make risk management their golden rule. Winning traders succeed through consistent habits, not luck. Prepare before the market opens. Review your watch list and news. Keep a detailed trading journal. Log every trade, your reasoning, and your emotions. Review your journal to spot strengths and fix mistakes. Discipline is crucial. Follow your plan, take your stop loss, and avoid chasing trades. Walk away when there are no good setups. Continuous improvement is key. Study, adapt, and refine your strategy. Stay humble, whether you're winning or losing. Don't get complacent after wins or discouraged after losses. Every trade is a learning opportunity. Consistency and discipline separate pros from amateurs. Make good habits automatic. Success is built one day at a time. Avoiding mistakes is as important as knowing what to do. Trading without a plan is gambling. Don't do it. Revenge trading after a loss leads to bigger losses. Step away and reset. Failing to cut losses turns small setbacks into disasters. Use stop losses every time. Learn to accept small losses as part of the game. Overtrading out of boredom or impatience drains your account. Quality over quantity. Professionals wait for the right setup. Amateurs force trades. Don't let emotions drive your decisions. Patience and discipline protect your capital. Most mistakes come from ignoring your plan or letting emotions take over. Recognize these traps and avoid them. The best traders make fewer, better trades. Protect your account by learning from others' mistakes. Patience is a trader's secret weapon. Wait for high-probability setups. Don't force trades. Let your winners run to their targets. Don't grab small profits out of fear. Big wins pay for many small losses. Stay calm. Trading triggers strong emotions, but you must remain objective. Detach your self-worth from your trades. Think like a scientist. Follow your process, record results, and stay neutral. Meditation and regular breaks help keep emotions in check. Trading is a marathon, not a sprint. Don't get too high on wins or too low on losses. Consistent execution matters more than any single trade. A cool head leads to better decisions. Patience and composure are your edge. Trading success comes from education, planning, and discipline. Start by learning. Don't risk money until you understand the game. Be realistic. Early losses are part of the process. Manage risk and keep losses small as you learn. The goal in your first year is survival and growth, not instant riches. Stay patient and persistent. Most quit before they succeed. Keep refining your plan and journaling your progress. Treat trading as a business, not a hobby. The market rewards those who commit to the process. Your journey starts with a decision to learn and improve. The path is long, but the rewards are real for those who stick with it. Are you ready to take the first step?